Hi, welcome to the channel. We're going to be reviewing a trade from Monday today, and I'll be taking you through that trade, how I framed it from start to finish. So yeah, we'll be going over that shortly. Before we get started, I just want to say, if you can, hit the like button, and if you like this sort of content, then please do subscribe. It's a small channel, when we're just getting started here, and when we hit 500 subscribers, we'll be looking at doing some live streaming, and hopefully doing some giveaways as well. So yeah, as I say, please hit that like button and subscribe as well. You also have a discount code with Apex that you can find in the description as well. So if you're interested in that, I think they've got 80% off all evaluations at the moment with our code, and it's a one-day pass as well, which means you can pass the evaluation in 1 day of trading as well. So yeah, if you're interested in that, links in the description. Yeah, so getting back to Monday's trade, I think it will probably go down as one of my best ever trades due to the entry. I mean, I didn't make that much money off of it because it was only one contract, but yeah, the entry was just phenomenal. So really glad that I managed to get a live recording of me taking it as well. That is on our channel if you want to check out that video. And watch me sort of take the trade live. So if you haven't already seen that, please do check it out. Yeah, so let's jump into the charts. So yeah, just wanted to go through with you guys how and what I was looking at. So starting here on the 1 hour chart, and this is pre-market open, pre-New York 9:30 open, which is the open time of the stock exchange essentially. And a couple of things I had marked out was this 1 hour fair value gap, which is a bearish one. It's a SIBI, sell side imbalance, buy side inefficiency. So I had that marked out because price had tapped up into it, and also had this fair value gap from the London from the pre-London move, basically. Yeah, this one was a busy. It's a bullish fair value gap, buy side imbalance, sell side inefficiency, and you can see price had reacted to it, closed with the bodies above 50%, and then moved up. So I had those two initially marked out as points of interest, and the other thing I had marked out was the London low here, which we'll just mark that up. So we've got the London low there, and if we now drop down into the 15-minute chart, we can see that the London high was taken out by the pre-market move that moved up, as we said, to that SIBI. Now on the 15-minute chart, I was looking for there's an imbalance in here, but there's a really nice what I was looking at was this fair value gap in here, which actually lined up really nicely. Let's say on the 15-minute chart, it lined up really nicely with this order block here. So we've got bullish order block, fair value gap, and obviously price has reacted previously to this 1 hour busy here. So I had that marked out on my chart. Let's just change this to a order block so you can see that. So those are the bits that I had marked out on my chart prior to the open. Yeah, so let's drop down to the 1 minute chart, and hopefully we can move things along pretty quickly. Sorry, that's going a bit quick, but I just want to get to the open. So yeah, here we have the market open, and this is the 1 minute chart. So 1 minute chart, price literally drove straight up at the open, which is this candle here, and and then kind of just watching price develop off the back of that. I didn't really fancy taking any shorts, to be honest with you, because I didn't really see that it had taken much in the form of liquidity. I know we're taking the London high, but there wasn't much else there for me, to be honest with you. So yeah, we'll just let this play out, and as we can see, price kind of just consolidated, and then we get the nice drop in there. Didn't really give a setup to enter, to be honest with you. It just kind of consolidated and dropped, so didn't take anything in there. But what it did do is it started tapping into, when it came down, into this fair value gap on the 15-minute and this bullish order block. So yeah, we're now at 9.46, and we can see prices drop down from the market open. If we just move it along slightly, yeah, just one more candle, and we can see that price really does accelerate down and takes out the London low. And at that stage, if we just move over to the 5-minute chart, something that I was looking at was the ES chart, and something interesting happened here. So if we look at the 5-minute chart on the ES, we can see that the London low doesn't get taken. It's quite a considerable divergence in price there. So we can see the NQ makes a lower low, and that is SMT. A divergence in price where one indice makes a lower low or a higher high than the other. Yes, we've got an SMT divergence there, so and we've tapped down into not only this 15-minute fair value gap, but the hourly busy down there. So yeah, we'll just let this play out a little bit longer. So just watching price, and we're getting towards silver bullet time now. I was kind of watching it on the 5-minute chart as well as the 1-minute chart, and what I really liked was these wicks that start developing down here, and as we can see, it respects this and the 1 hour busy down here, and it respects this 15-minute fair value gap down here as well. So it was looking like we could get something here. We've got an SMT, we've got respect of a higher time frame PD array, and we've taken out sell side liquidity in the form of the London low. So yeah, once I'm seeing that respect, it's dropped down to the 1-minute chart. The thing we're looking for here is, you can see price is kind of consolidating on the 1-minute chart. Now what we look for at this sort of stage, and we've literally just entered the silver bullet hour for the AM session, so we're looking for some displacement, and at 10:04 we get that. We get a nice large green candle to the upside, and the following candle closes and leaves us with an inefficiency, a fair value gap. So we've displaced to the upside here. We've got a fair value gap. We've got SMT, London low's been taken. We've tapped into a higher time frame PD array. So we've got a number of things that we're looking at here that we're thinking this could be a nice trade. And that's how I'm kind of framing these sorts of trades, and combining a number of different elements to pick out the higher probability trades. So we'll just move this along a couple more, and we can see that the highs get taken out here. So we've got a market structure shift. I mean, it's not the cleanest, to be fair, but it does shift. And you can see that there's a little bit of displacement in there from that move up. So something that we'd look at now, once we've got this displacement and move away, is we want to potentially get involved in this trade now, because we've got a lot of things going in our favour for a potential move to the upside. And what I do is I'll mark out the low to high, and we're looking for an area in which we can get involved. Now this fair value gap really lines up nicely with, not only is it below 50% of that range, but one of the things I really liked about it was this OTE, optimal trade entry, which was from 17,991 to 17,98425, and that is another ICT strategy where we can enter based off of the optimal trade entry, and that's basically where I set my buy order to. I actually put it one tick above, so it was there 17,99125, so it was just above OTE by one tick, which is nothing really, but yeah, I set it there, and boy am I glad I did because it came back and obviously hit that. So let's just map out the stop loss and take profit. Now take profit, I was looking at these highs up here. I had this as buy side liquidity. Basically I didn't fancy it going all the way up here, in all honesty, only because it had tapped into that hourly bearish fair value gap, and I didn't want to hold any longer than that. Yeah, that was enough for me. And the take profit, what's my take profit level? 18,3625. Yeah, there. So that was my take profit level, and the stop loss was just in and amongst these wicks, essentially. 17,975. So I'll just put it below here, because we've got a 1 minute order block there, a fair value gap. If that fails, then the likelihood is that we're incorrect about this trade idea, and we'll have to just take a loss there. So that was the thinking around sort of take profit. Pretty decent risk to reward, 2.77. So I was quite happy with that. There was a lot of things that worked in conjunction with one another, a lot of ICT theories, SMT, OTE, discount, fair value gap. So that was my thinking. And if we move it along a couple of candles, that's where we got the buy, and it triggered the buy order there. I had a limit set, it came down, and I wasn't sure if it actually hit at start, because there was, I don't know what was going on, there was like a little bit of delay in my trading view. So hopefully I can move that. Yes, I wasn't sure if it actually had hit had triggered the entry. So I was like, oh, don't tell me it's missed. But thankfully it had entered to the tick as well, which was unbelievable. I mean, it's very rare that you get that. You usually get some sort of wicking down here, but it wicked down to allow me to enter, which was phenomenal, really. I was really pleased with it. Yeah, so as you can see, we've got market structure shift there, and now we're in the trade, and very quickly we were in profit. You know, I was $300 odd up straight away, and it did come back down actually to around the midpoint of this wick, I believe. Yeah, so it came back down to the midpoint of that wick, and it's a good job I didn't set to just over break even there, because it probably would have wicked me out, in all honesty. But yeah, if we move it a little bit further forward, we can see that eventually I was looking at this and looking at these highs, waiting for these highs to be broken, which is the immediate highs essentially. So usually when the immediate highs are broken, like they are there, I would then set the stop loss to break even or just over, to protect the trade, because we've already hit some form of buy side liquidity. Yeah, it's just what I like to do. I do find that I found a lot in my back testing that if price does come back down to the entry level, there's a high probability chance that it will come and take out the stop loss. So I tend to set my break even there, set my stop loss to break even at that stage. Now, something I was looking at in here when it was started to really move up, and it did accelerate through this fair value gap on the 1 minute chart that it created from, this is from the open basically, where it dropped down, and it just blew straight through that, which was really nice. Really wanted to see that acceleration, and it was at this stage where I thought, yeah, we're in here. This is looking really good. What happens on the next candle pleased me even more, because it wicked all the way down into that fair value gap, and with it breaking through it, we can assume that it's going to treat that potentially as support, as well as tapping into these highs. So, and what we call that is like an immediate rebalance, especially when it's got a nice long wick like that. It doesn't leave the inefficiency, so it's delivering the sell side and then wicking up to balance that. So I was really pleased when it did that, and I was quite happy in the thought that it wasn't going to come back below this level, this inversion fair value gap. Yeah, so we move it forward a little bit and it starts to chug up a little bit more. At this stage I'm thinking I'm going to move my stop loss to protect the trade. So yeah, I'm like $700 up here, so pretty well extended, quite happy. If it comes back and takes us out, we've still got a decent amount of profit, but I can't envisage that it's going to come back down and revisit this area, and certainly not break it. So rolled my stop loss up there. I felt that was a good place to put it. And yeah, if we move it forward a little bit more, it gets a little bit more interesting here. Now this is where it got a little bit interesting, because I think you can see from a lot of the videos that I put on my socials and stuff about this trade, I was like, oh, please don't reverse on me now. You know, it's not taking the buy side yet. If it was going to reverse on me now, it would be really gutting, although I still would have taken some profit. But given the entry and how close it was to that buy side, yeah, I was just kind of willing it over the line at this stage. But it did come back down, and what I was looking for at this stage was the next candle here to overlap it. Ideally, it didn't quite do that, but it filled it, and it showed enough for me to say it's gonna push up once more. Once that candle closed, I rolled my stop loss up to there. So worst case scenario, excuse me, worst case scenario, I'm going to take $600 here, but I still expect it to take this buy side. And then if we move it forward again, we can see we get the fill, and buy side gets taken. I had it just above the buy side. I'm not too sure why I put my take profit up there, but usually you can get away with a little bit more of an extension on the buy side. But yeah, really clean trade. As I say, I don't expect that many will come in like that, so just wanted to review it with you guys, let you know my thinking behind it, how I framed it on the multiple time frames. You got the 5 minute there, the 15 minute as well, and obviously the 1 hour chart. But yeah, generally I'll be using elements of those time frames and triggering the orders on the 1 minute chart. Sometimes I do drop down into 15 and 30-second chart, but generally the 1 minute chart will give us enough. Again, I use the 2 and 3, 4 minute charts at times as well, if there's nothing clear on the 1 minute. But yeah, hopefully you guys found that insightful, and yeah, as I say, hopefully we'll do a few more of these going forward, and we can start building a little bit of a community here. So yeah, please do leave a like if you like the content, and if you're not already, please do subscribe. Thanks.